Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's going on in investment markets and what to look out for in the days and weeks ahead. Now, let's have a bit of a recap where we are at the moment. In the last week, we've seen markets generally strengthen in Asia. So the Japanese stock market, the Nikkei 225, is up around 5%, along with the rest of Asia, which has been up around about 4% in the last week. It's an emerging market story at the moment that's been doing very well as we've started the new year, because emerging market indices are up around 4% in the last week, and they're pushing towards all-time highs, which is a dynamic, a story you're going to probably hear a lot more about in the coming weeks and months, and that's about having exposure to emerging markets in your portfolios. I mean, the FTSE this last week, the FTSE 100 has been down around about 1.4%, and we've seen bond yields start to pick up, and that's particularly in US Treasuries, but also we've seen it in UK gilts. And now, if you look at your stock market app on your phone, if you open it up, you will see that the FTSE 100 is around about 6,790, the S&P 500 is around about 3,800-ish, the DAX is around about 1,400. Now, to put that into context of the year to date, we've seen emerging markets rally about 6% year to date, 4% for the FTSE 100. Europe is lagging somewhat. It's up around about 2.5% alongside the more diversified global indices. So as a benchmark, if you look at something like the MSCI, the World Index, that's up around about 2.5% year to date. And the S&P 500 is up around about 1.4%. So that's lagging slightly. And that is down to the dollar. So you remember in previous videos I've talked about the US dollar weakening. Of course, if you hold overseas assets in America, so let's say you hold US equities, don't forget that even if US equity markets are going up, if the dollar is weakening, and that means conversely that the pound's been strengthening, which it has obviously been doing anyway because of some optimism we had around Brexit, it means that any assets you have denominated in dollar values are worth less when you convert that into the UK pound. So what we're seeing is an emerging market story emerging, and you're going to probably hear more about it, as I say, going forward, particularly as we've had a long extended period where emerging markets have tended to lag other areas of portfolios for a number of years. We've had a lot of volatility in emerging markets. So we're going to see more of that probably in the coming weeks and months, particularly on the news headlines when people catch up. And if you look at your own portfolios, you will have seen, I mean, my own portfolio on 80/20 Investor, my 50k that I invest live for people to see, I increased and actually introduced significant emerging market exposure just before Christmas. So that's obviously paid dividends. Now, at the moment, you will see that the pound-dollar exchange rate has pushed higher. We talked about it last week, and it was around about $1.36. It's pushed higher towards $1.37. We get pullbacks intermittently, and that could mean if we keep pushing high above that $1.37 level that we could head towards $1.40. So that would be something to keep an eye on. It's having an impact on your portfolios. I think the biggest thing we're seeing at the moment is the dollar weakness that we've had that's been accelerating to the downside. It had a little bit of a respite in the last week, and you would have noticed that it was quite interesting because I talked last week about Bitcoin and saying that a lot of the Bitcoin headlines have been actually the rally has been driven by the devaluation in the dollar. And it's not necessarily so much to do with all the headlines that talk about it taking over from gold, for example. And what we saw this week was we saw the dollar strengthen slightly, and it caused a wobble in not only gold, but also we saw it in Bitcoin. And Bitcoin fell around about 20% in about just over a day. So it shows you that it's a very volatile asset, and it's not for everybody at all. Gold has pulled back. It fell about 4% since this time last week. So gold is interesting because at a key level, we're now sort of in the 1800 level. So we fell down below 1900. I think we're about 1850 with the last time I looked. And we need to find some stability there to see if gold can rebound. I mean, the narrative around gold still makes some sense to a certain extent about the devaluation of the dollar, the epic money printing that's coming along, and stimulus that's coming. I'll talk about that in a second. That would obviously push the dollar further downwards, which historically is good for gold, but of course there are other things that are starting to influence gold. So it's been an interesting week, but we are seeing a different dynamic now in equity markets. So in the US, the US is starting to feel like it's lagging slightly. UK equities have had obviously a good start to the year. This week, not so much so. The FTSE 100 has obviously been the leader over the FTSE 250 because after the euphoria of Brexit, we have got the realization that we are all in lockdown once again, which when we're in lockdown, that will obviously stifle UK economic growth, which tends to hit the FTSE 250, the smaller cap companies, a little bit more. And talking about the large caps, it's been interesting to see over the last quarter almost, the likes of Google, Apple, Microsoft, Amazon, the sort of four biggest companies. And if we move across to China, we talk about the likes of Alibaba, they've gone nowhere. And they've largely just sort of trod sideways. We've seen some sell-offs actually in Alibaba in China. And some of that is because of Chinese crackdown on some of those large technology companies over there. But we've seen a pullback, and that's partly because of yields. And so it's be interesting in markets going forward to see that the market is still pushing to highs. We had another new all-time high on the S&P 500 in the last week, but it's not those stocks everybody said were driving the market in the autumn, or up to the autumn, that are doing it. So that's a good thing in some ways because it means there's strength and breadth in the market. And it might be interesting to see what happens on those stocks. Keep an eye on the likes of Google, Apple, Amazon, Microsoft in the coming months, because if they then start to pick up, they've actually sort of gone sideways for a while, consolidated. If they then begin to join in with this rally again, then that will push the wider indices up even higher, which will be interesting. Now, one of the big stories we saw in the last week was about what's been going on in American politics. And of course, there are now impeachment proceedings against Donald Trump. The markets largely looked through this because they are more obsessed with what's going on with the new administration and Joe Biden. And this is the interesting story this week, is that today, at some point after this show has gone out, we're likely to hear from Joe Biden about the economic stimulus that he's going to push through once in office. There are rumors it's going to be the size of $2 trillion. That could be quite market moving. We're also having the Fed talk today as well. So we could see some quite interesting things happen in the next week. So keep an eye on equity markets in America, but particularly keep an eye on bond yields, because obviously if we have a big stimulus package, then that could push up bond yields even further. US Treasuries, for example, the yield has broken above 1. It's still obviously historically low, but from the recent history, it's starting to break higher. We're going up to 1.19 this week. And we've also seen the UK gilt market move up similarly in the last week to above 0.3%. We're still low numbers, but what it's showing is that potentially a change in direction. The bond markets could start to sell off, because if yields rise on bonds, don't forget that bonds themselves, the prices start to fall. Will that mean that people start to rotate out of bonds into equities? Be interesting to see. But this stimulus package is what the market's focused on. So will it disappoint? Will they be happy? And the rise in yields is also interesting to keep an eye on, because it's one of the reasons gold has started to wobble, because gold obviously doesn't do very well in a rising yield environment. Don't forget, gold in itself doesn't really give you anything other than the price movements. As Warren Buffett often has said, it's to do with people being more scared than you, the reason why they would buy it off you in the future, which drives prices. So the bond market has become quite interesting. We do talk a lot about equity markets, but with stimulus packages perhaps coming along, it will be interesting to see what actually happens in bond markets and how that then unravels and starts to influence equity markets. Will we see more people go into equity markets? And equity markets are very high at the moment. Could they push even higher? And like as I say, some of these big tech names, if they start to join in the rally themselves. So, that is it for this week on Damien's Midweek Markets. Very interesting week. I think there's a big news in America that we want to watch, and what's actually announced. Of course, we've always got COVID in the background, and obviously we've got Brexit, the fallout of Brexit in the background as well. But at the moment, markets are still pushing higher. Equity markets, we get little wobbles here and there. Keep an eye on Asia. is one of the big stories I want you to take away for, and the Korean Kospi, which I think I mentioned last week. So as ever, you can get in touch with me. Damien at moneytothemasses.com is the email address. Twitter, Money to the Masses with the number 2. Instagram, Facebook. Don't forget to join our Facebook group. It's very popular. There's about nearly 3,000 people in it now, all talking about various things to do with money and investing. And of course, don't forget to subscribe to our YouTube channel.